Hey guys, it's BlockchainBrad speaking, and I've had a few days off with my family. It's been awesome, but it's great to be back with you guys. And today I'm doing something a little bit different than I normally have done before, in that I'm going to be talking about Bitcoin. Now, as some of you guys might know, for those who've listened to me before, I'm what you'd call a Bitcoin agnostic. And that means that quite simply I'm ambivalent. I'm on the fence with Bitcoin. I have been right from the outset of my research, but I have finally delved into the research out of respect for one of my fellow Aussie crypto currency YouTubers, and his name is Bo. So Bo, this is out of respect for you that I've done this. It was based on what you can see on screen. Bo from Cryptocurrency Australia had done a very recent post on, and the title is Bitcoin, a case study and opinion piece on its past, present and future, potential future. So mate, as a crypto colleague, I want to just commend you for your beginning efforts, and I also thought it would be prudent to continue on with that investigation for myself, for my own understanding, and perhaps that would provide some sort of means for me to move away from that agnostic and ambivalent position. So that's the reason why, and the focus of this video is really to delve deep into the SegWit2x argument, to look specifically at the Bit family, and I'm going to explain what I mean by that. I'm going to be looking at expert views and viewpoints, and really look at the reasoning behind each of these expert opinions. I'm going to sort of provide a Word document list of the key points that Bo has very prudently raised as part of his analysis, and then I'm going to start to raise some other ones that I think are relevant. Guys, the most important thing I think I can learn from this is your feedback, because this is a huge risk for any crypto YouTuber to put their Bitcoin views out there, but certainly I don't want to send the message that I know anything compared to these experts. I really don't. Everything I do is based on sort of research that I can do from home, and for that reason I'm really keen to develop my understanding of Bitcoin and generally improve my knowledge so that I can become a more astute investor in this space. So guys, without further ado, let's get into the analysis. So guys, as you can see, Bo has did fantastic some work, and again just want to commend him for that. As I said, I wanted to move on now to some of the key points to sort of raise from Bo's analysis. So in Bo's presentation, these are the key points that I identified from his talk. He explained things like there's a market cap that continues to increase. From his basic statistical analysis on Bitcoin, he deduced certain patterns, and I'll talk about those in a minute. For example, he worked out from his median per annum price that there was a 17.53 median growth rate since the inception and since the initial release of the original Bitcoin into the market. He explained the top 5 countries adopting it were South Africa, Slovenia, Estonia, Ghana, and Nigeria. Bitcoin, as he explained, is the very first cryptocurrency, and he did some very interesting Google trend searches, which are always relevant for beginning research. And he found that also the increasing scarcity of Bitcoin was relevant because as it becomes more and more difficult to mine. So we'll talk about that at length when I unpack that particular point of scarcity. Also, through his searches, he found that the volume of searches has increased its average since its beginning, and wallet numbers have increased in their averages as well, which were again signs that that the uptake is strong and increasing for Bitcoin itself. Some other points that Bo raised was that the more anti-institutional sentiment, the more BTC seems to strengthen. And we know things like from Diamond and many other anti-Bitcoin media that's being released, we know that has generally had, surprisingly, a very beneficial effect on Bitcoin. Some other points were there was a basic volatility index that's graduating to a much more stable pattern, and Bo's argument through his research was that that volatility has actually decreased by at least 1%, and that's improved the overall positive outlook for Bitcoin. The next thing was the adoption curve has gradually become to what Bo explained is more of a negligible point in its current history, which is probably really good if you're a Bitcoin investor, because basically that means that through mass adoption there's a greater there's much greater interest in the Bitcoin itself. There's much more robust transactions happening as well. But more importantly, there's a lot of hodlers out there, which can only facilitate the token value. The other points were that there's, from a simple economic view of supply and demand, which is your basic and most sort of fundamental economic principle, Bo's key argument was that because of the algorithm's design to have less of its tokens released over its life period, that simply means that the supply is going to diminish over time. And currently the demand is increasing, so for that reason alone, Bo has quite rightly argued that the value of Bitcoin itself is likely to go up. And finally, the point that I suppose I wanted to raise from this is that we need a greater discussion on SegWit2x, in that it is going to be really key to the discussion today, and also to other protocols relevant to BTC or to Bitcoin and its Bitcoin family. We probably need to also explore a little bit more on the generational designs of blockchains, because that's something that was perhaps overlooked in the first layer of discussion that Bo's raised, and I want to sort of go into that a little bit more. But overall, Bo, cheers mate for your beginning discussion. I think it was awesome. It gave me a bit of confidence to continue on your work, and hopefully this facilitates not only your work but a broader understanding of Bitcoin for the space. So I just wanted to go now on to some of the examples. Now I'm going to rush through this because I'm not going to go through each article. I'll just say that I used many of these articles as a platform for my own understanding and research, but I also spent a lot of hours listening to a lot of different YouTubes, because I found that by listening to key experts and researchers and investors in the crypto space, I can really get a clear picture of their position. And I didn't listen to really those who weren't in the core and inner circles of Bitcoin. So for example, I would listen to people like Charles Hoskinson or Roger Ver or Craig Wright. Regardless of how we feel about him, he's certainly within the space. I listen to people like Ivan, Box Mining's Michael from Box Mining. So I listened to a lot of different people with various credentials, and I just thought I'd quickly show you. So I looked at these sites. One was called Bitcoin is Unsustainable. I looked at Bitcoins are a waste of energy, literally. I wanted to see what negative media was out there, and that was not because I wanted to formulate a negative impression, because again, I tried to be as objective as I could, but I wanted to see what these arguments were in the media. Then I saw this one: the world's cryptocurrency mining uses more electricity than Iceland. Bitcoin mining wastes vast amounts of energy, harms the environment. Again, from Andreas, Bitcoin Q&A, scaling, trust and trade-offs. Then how blockchain is taking over business systems. With BTC China ready to stop withdrawals, China Bitcoin gates are closing. South Korea's central bank chief, Bitcoin is a commodity, not a currency. So again, these were all formulating my impressions of Bitcoin from a media's position. Communist Congress is over, now what for Bitcoin ban? And then some other probably really key pieces of research. This was led by a proposal from Peter Ruzin, who's a key part of N-Chain and N-Chain research that relates to Bitcoin. And this was basically a project called the Gigabot Testnet. And what that was doing was trying to investigate, very importantly, the ability for Bitcoin to be able to cope with an increase in block size and how that would impact its scalability and things like that. So it was really important, and I'll be talking specifically about that later on. But you can see some important connections there with Bitcoin Unlimited. Then I watched, as I mentioned before, Michael's review. It was only really recent, actually, today that it was released. And he was really exploring SegWit2x, which I'll be trying to do as well. And he did a great job of that. And then I also watched a very recent post from Max Kaiser's website, or no, my apologies, from CryptoKid, but I know Max has actually released it as well. And this was a very key interview with Roger Ver, and Roger Ver was very forthright in his view of Bitcoin Cash. We'll be talking about that. And then there were some other very important articles I found on Bitcoin Magazine, and one of them was talking about Silbert's digital currency group, and we all know what that's going to mean for Bitcoin itself. I'm going to be talking at length about in relation to SegWit2x. And then there was another article that it was important as well, and this one was entitled 2x or no 2x, why some want to hard fork Bitcoin and why others do not. Now this was really brilliant because it went through key arguments as to the yes and the no, so the affirmative and the negative. But again, the imperative was that I did my research to try and remain ambivalent as possible throughout until I made a final decision at the end, which I'm going to provide. Another person I looked at and documented was, as I said, Tone Vey, and he had some interesting points to raise. And that's it. So guys, if I go back, I just want to start the discussion, and I'm really keen to hear your feedback on this, because it was I still think it's a huge risk even putting it out there. But these are the points I found based on having investigated after Bo's initial assessment of Bitcoin. So these are the things I thought were worth raising. Firstly, the point one is blockchain wasn't really referenced in the assessment, and that's not really designed to be criticism on my part for having, because I obviously want to support Bo as much as possible. But I want to raise that point because if you're ever going to evaluate its store of value or its architecture, it's really important that that be discussed in the context of blockchain itself, because whilst it is a cryptocurrency and it is the first functional and successful cryptocurrency ever written, fundamentally at its core it is a blockchain. So the reason why I mention that is because we have progressed in terms of architectural design and innovation from this initial generation 1 state of blockchain, and that's a separate thing in terms of asset value to the cryptocurrency layer. So what I'm saying there is that if we're talking solely on a cryptocurrency level, from my view, having looked at quite a few, there is no better cryptocurrency than Bitcoin in its design. But as an asset value for blockchain, there's certainly valid arguments to suggest that through the technological evolution that we've seen since 2009, there's every reason why we need to be taking generation 2 and 3 seriously, because they have great potential in the business sector, in enterprise sector, and even in the public sector as well. Okay, so the next thing to mention was that I found that there was based on all the different review articles, which I'm going to list for you guys underneath, so that's just a starting point. If you want to go and look at more information, I'm sure many of you know a lot more than me about Bitcoin anyway, but I found that there was a need for a greater focus on the importance of consensus, in that if you're going to unpack what Bitcoin is, you really do need to understand exactly what the consensus algorithm represents. And as a proof of work model, it's not simply a dynamic thing, as was stated. Really, to be honest, what that consensus algorithm is, it's a finite design that's designed, I guess, according to that algorithm, meaning that in Bitcoin, it has some sort of process in which things like scarcity are graduated throughout its design. What I'm trying to get to is that from the outset, based on the consensus model, based on the architecture, based on the algorithms, it was specifically designed to be a store of value, and that was finite in its design. So moving on, the next point I wanted to sort of go on with was the importance of discussing the forkability of Bitcoin itself. So when we're going to try and unpack the value of Bitcoin, we also need to be realists and recognize that it is a entirely forkable protocol. It's an entirely forkable algorithm, meaning that whilst we may be advocates for the proof of work model, again, harping back to the blockchain generational developments, currently there are several different algorithms out there and protocols that facilitate an unforkable design, or they facilitate much more security for blockchains because they are not reliant on consensus models that again are also codependent on things like mining. So with the mining equation removed from the algorithm itself, it's freed up a lot of the security issues, and that just needs to be raised if we're going to talk about Bitcoin itself. But again, when we're talking about it as purely a currency, it doesn't have as much relevance because there is no better currency, in my opinion, than Bitcoin in that form. Okay, so the other thing I wanted to raise was, as it was sort of hopping back to, is all third generation blockchains have moved away from the proof of work model, and I'm pretty confident to say that it's all of them. They've at least gone to proof of stake. Some have gone to the delegated Byzantine fault tolerance, some to a loop chain base of their own, and many of them have actually designed their own algorithms to suit for that reason, and many very well-respected blockchain developers have argued the point for this at the blockchain level, and it's been repeated in many papers I've read, not just one or two, but I'm talking, you know, for example, Cardano with its very comprehensive white papers explains in detail why the new algorithms have been written and why they've moved away from the proof of work. We're talking about Vincent Grimoli from the University of Sydney with his new red belly blockchain and the reasons for their Byzantine fault tolerance protocols. And we were obviously talking South Korea with their similar initiatives, and then we're talking Hyperledger. All of these sorts of initiatives, whether they be consortium based or public chain initiatives, they're all trying to assert this concept that unforkable blockchains are, you know, of great value and can be utilized in the public domain. So I just wanted to really put that out there, because obviously Bitcoin is not designed in that way. Now, moving on to the issues of scalability, this really has to be addressed because if we're going to, again, talk about Bitcoin, we need to talk about the elephant in the room, and one of those is scalability, because since its inception and since its beginnings, it's always had scalability issues, and that was to be, you know, the case given its proof of work algorithm. One of the challenges, no doubt, is with the argument of the block size in conjunction with low fees and ease of access to the blocks themselves. One of the fundamental flaws initially was trying to redress scalability in conjunction with making sure that these fees weren't compromised. You know, they weren't increased as scalability went up. And what they found over time was that this was a continual hindrance. Hence, the bit family, as I call it, you know, we're talking SegWit1, SegWit2, we're talking Bitcoin Cash, all of these different splits, and we're about to see Bitcoin Gold. These are all part of a bit family that we're all struggling with different perspectives on issues like scalability, and hence they have all established their own position on that. So I just wanted to raise that because that's something that is important. The other thing is we'll need to talk about the consequences of forking as part of the POW model. And what I mean by that is that fundamentally underpinning all cryptocurrencies are users. And users are those, sorry, just got a car passing by. So the users are the ones who fundamentally decide on the value of any cryptocurrency, because it's the usership, it's the uptake from the community that ultimately determine its value. And when we are talking about a coin that's replete with forking and it's conditioned on its continuance of this bifurcating structure, it's likely that could diminish its overall value to the point where people could decide to discontinue their connection with the bit family entirely, or they would divert all their attention to arguably one of those. So we're going to look at specifically that argument, but again, the risks of forking are very significant at the usership level. The next one I want to talk about was the infighting of the bit family itself, and I agree with Ivan from Ivan Tech. I was listening to him today, and his argument was that one of the key problems that Bitcoin's facing is actually not at a technological level, and he would know, being a developer and a programmer. What his argument was that in fact it's at the political level, and that there's differential agendas, and that each of them are vying for a stake in the control of Bitcoin for the future, and hence there's this constant infighting. But from an investor's position, obviously that's very disconcerting, to the point where many are up in arms and not really sure where to invest their Bitcoin, their original Bitcoin, until this is all sorted out, and some are even moving away into altcoins. So it's just important to recognize that if we're going to talk about Bitcoin, we really need to unpack what is actually going on in the bit family since the first fork sort of happened. Some other things I want to talk about was we really need to, if we're going to discuss Bitcoin, we have to get into the space, or we have to practice research, and we have to be able to go and really listen to the arguments of those people who are the designers of Bitcoin. Yeah, what I tried to do was then back my own view or I tried to formulate my view based on those in the know, those who are well versed in technological speak and also in the political speak of Bitcoin. Some other things are that the Bitcoin itself was designed on the premise of circumventing third parties, and it successfully continues to do this while ever the internet runs. So unless someone can find a way to turn the internet off for a country, then it's going to be a successful decentralized blockchain. But in saying that, that's in itself an inherent risk for its own viability, because juxtaposed with that reality is governments are now trying to formulate their own sovereign digital currencies. Because of that, and because of the impossibility of shutting down things like Bitcoin, it is important to recognize that there is this disjuncture right now, and there's this discord happening between governments and Bitcoin, for reasons of lack of control versus control, centrality versus decentrality, decentralization versus centralization. Some of the other things to mention are, based on the research I've done, it seems that there's also much more likely that BCH or Bitcoin Cash will challenge Bitcoin Core, and that other centralizing Bitcoins drop in value, and I'm going to explain why this is in my findings. Some other things to mention is that Bitcoin's primary function is a decentralized currency, so it was specifically designed to be decentralized money. It is simple and it's elegant, but it does require a lot of money to run it in its current state because of its design. But again, harping back to those generational developments, if it does change in its form by design, and it's every likelihood that to compete in the market it may, hopefully it doesn't, but if it does transform through layers of work being built upon its platform, then that's going to move out of its initial currency form into an asset structure, and that's where it will be competing with things like Ethereum and Neo and Icon, and also have to feed into an interoperable, scalable capacity. Ideally, we'd like to see nothing change and it remain in its store of value form. But I'm just raising the point that I know for sure that various forked entities as part of the Bit family are looking towards the future and trying to establish and assert layers as part of its blockchain design. And also, guys, just to raise a couple other points. Bitcoin maximalism. So again, I've been labeled a neo-maximalist, which I think is funny. So I really don't know that much about blockchain anyway. I'm trying to just be conversant in the space with various aspects of Bitcoin as I learn it. But again, whenever you see someone really emotionally connected with a particular Bitcoin, I always question whether or not they are able to see through that objectively. And I just want to, again, raise the point of, if you do happen to, be researching someone who seems to be really emotionally intertwined with their investment, then really maybe step back and question, are they a Bitcoin maximalist? Are they able to see the technology and the politics for what it is? And then assess it from that point. And finally, I wanted to use Charles Hoskinson's analogy that I heard him use at a Nexus conference. He said that BTC, or Bitcoin, is like gold, and by nature it's a deflationary currency. It has scarcity programmed into its core, but what coin are we talking about when we talk about BTC? Are we talking about Bitcoin Core? Are we talking about Bitcoin Cash? Are we talking about Bitcoin Gold? Are we talking about SegWit2x or the B2X coin? These are important questions we need to explore, and I'm going to show you some research from experts and in the field that maybe will help you formulate your view. But I guess I wanted to finish these key points simply also in saying that Bitcoin itself right now is in a phase of significant flux. There's a lot of uncertainty, and the idea and the premise for this video is really just to try and help people to set their mind at ease and help them perhaps formulate a plan as this next fork happens. So guys, based on as I said, on various expert and researchers' opinions, I've just tried to put down a few different statements that came from these sources. So Charles Hoskinson, for example, if you want to check it out, I'll have all of these links for you as well. He explained that the scarce token that didn't require a third-party intermediary it started to become worth real money. But the issue is that in BTC transactions, there's a story. So contracts via programmable pages, there is no business logic behind the peer-to-peer transaction. So what he was actually saying was that he was raising the point through his presentation that, again, harping back to generation 1, 2 and 3, with generation 2 they have a narrative or a story, and within that story is essentially a contract, an agreement that can be asserted and appended onto the blockchain. That cannot be achieved at present with layer 1 Bitcoin architecture. Now again, that's the whole point, I think, though, is recognizing this and understanding that there is every potential for this to evolve on different parts of the Bitcoin forked community. And we simply don't know what's going on with all the different businesses that are formulating their projects and their layer 2 aims. And again, that will push it from its initial currency value, storage of value, to something else that will reform its entire design and intention or purpose. So if we're strictly speaking about store of value, the fundamental and primordial architecture that Bitcoin was when it first was first released, that is in my view the true Bitcoin. And since forks have happened, that initial structure has actually been it's been altered by all the different groups that have represented each fork that's happened. So what I'm saying is that if we really want to argue what Bitcoin is, we need to understand what each of these protocols are. Hey guys, sorry, I just had some problems with the camera. Yeah, Vitalik Buterin, I think the big point I wanted to raise there was just that he, right from the outset, was a huge advocate for Bitcoin. He obviously started the Bitcoin magazine, and I just wanted to really address him in my review because his intention was very much to support the egalitarian, idealistic, decentralized philosophies behind Bitcoin. And he was a huge proponent, obviously, of the decentralized network, of enfranchising, a system in which all third-party intermediaries were circumvented. So in every way, Vitalik is a proponent and supporter of Bitcoin, and if you ever hear him speak of any of the particular forks, I would suggest you really pay attention, because he would be supporting those in which are most akin to the original Bitcoin architecture. Okay, the next person I wanted to mention was someone I regard very highly and is someone very important at the moment. His name is Vincent Gremmerly. He is a researcher at the University of Sydney, and basically he's written a very important paper called The Balance Attack, or Why Forkable Blockchains Are Ill-Suited for Consortium. And obviously, some would argue that's not relevant for Bitcoin, and I would agree. And that's because from the outset it was designed not to be part of the consortium conversation. It was designed to be a peer-to-peer cash-based system that provided a means which we could circumvent third parties. So why would I address this now? The reason is that through the forks that have happened through Bitcoin since its inception, there's every likelihood that some of these will be trying to look towards the consortium, and I really do think that SegWit2x is one of them. There's every reason, and as I explained in some of the examples, well, as I hinted to in some of the media examples, there's an absolute link between consortium, enterprise, and SegWit2x, and I'll be talking about that later. But the argument here is that the proof of work model itself, it doesn't suit enterprise. So that's another reason why Bitcoin could be supported at the currency level, but perhaps not be suited for the enterprise market. And that's another reason to further the argument that SegWit2x really doesn't stack up when it comes to an asset value in the blockchain space. So just basically, guys, I won't go through all of this, but he raised some very important points, and you can review this. I'm happy to send you this document, no worries at all. But yeah, Vincent is certainly well experienced. He's actually designing currently a very comprehensive blockchain in Australia called the Red Belly blockchain. If you want to go and check that out, you can certainly Google it. Some other things to sort of talk about, as I said, I was going to be alluding to Bitcoin Cash and Bitcoin Core. Some of the things that I found was I watched a few debates on this as well, and I found for the most part, often Bitcoin Cash was winning those debates. And these are some of the reasons why. Bitcoin Cash is based on increasing the block size. At the moment they're looking to an 8 mega block size, and the reason why they want to do that is simply to lower the transaction and increase confirmation speeds. Some of the other things were that the arguments were that it was better suited for commerce and remittances, and that was sourced from many different experts, in that it's designed, yes, it needs more computational data as we expand the overall network, but there was a lot of arguments to suggest that it better suited commerce. The other argument was that Bitcoin, when it hits a certain limit, its transaction fees and confirmation times skyrocketed, and that is actually true up until now. And obviously we have Lightning networks to facilitate some of these core problems, but there's no question that's become a recurrent problem, in that transaction fees have become quite exorbitant and sometimes impractical for especially for small transactions in Bitcoin. So it's just something to keep in mind. I'm not trying to suggest either or right now. I'm just simply saying that there is some key arguments from these debates that were sort of foregrounded as a result. Another one was that through Bitcoin Cash, they have inbuilt provisions for greater scalability, and right now they are actually trying to build out that scalability issue, or they're trying to facilitate a more scalable capacity through different innovations on a layer 2 design. So if you want to investigate that a bit more, but certainly Bitcoin Cash is doing some pretty amazing things, innovative things at a second layer level. Bitcoin Cash, in terms of its resemblance to the original design, this is probably one of the most important things I did want to sort of broach, is that if we're going to promote Bitcoin, what I wanted to do was promote the Bitcoins that resembled the original architecture. I wanted to really look at, okay, what's happened since all these different breakdowns in Bitcoin, and which one of them it actually purports to be most akin to it, and which one actually is. And what I found was that from a technological level and from even a political level, Bitcoin Cash is doing everything it can to try and resemble the original ideal that Bitcoin started with. It's trying to be an entirely decentralized currency that is peer-to-peer and doesn't have any interaction with a third-party intermediary at this stage. And obviously anything that's designed on a second layer level is designed to maintain the integrity of that decentralized nature of the Bitcoin, of the blockchain. Whilst in saying that, I also don't want to diminish the value of Bitcoin Core, in that I understand that yes, it's based on SegWit, it's premised on a change in the signature where they've moved the signature witness to another part of the blockchain, but essentially having read the Bitcoin white paper, maintaining the signatures as they were running on the in a chain on the blockchain, that was an important feature of the original architecture. And to amend that in any way, or to shift the signature witness, really was not only controversial, but it contravened the very core of Bitcoin. It compromised what it stood for, because anything that you change from the original design, if it was already functioning despite some of its issues, potentially risked the store of value itself. So it's just important to recognize that, I think, and as we go on. I also wanted to talk about some other things that came up from people like Crypto Kronos. He argued for 3 reasons why Bitcoin Cash will overpower BTC. Again, I'm not saying that's the case, but it's important that we try and provide all sources of media about this issue. His arguments were that Bitcoin Cash has a much higher block size, and so it will have much lower transaction costs for consumers. Miners can switch between the two, and Bitcoin Cash has safety mechanisms built to cope with this. He also explained that there are higher transaction volumes and lower fees. Then a very recent interview with Max Kaiser and Roger Ver came up, and I wrote these points down. Bitcoin Cash is really the result of internal politics. It's not really premised on technological dysfunction. It's really a case of arguments based on differences of opinion on the technology. So in terms of business and commerce, Roger's argument is that it's much more preferable to have Bitcoin Cash because of its capabilities. He's also saying that miners are now supporting Bitcoin Cash. However, we know that they're also very much in the camp of SegWit2x because of ease of access for miners in this new fork. The incentive is also that miners can be paid in the bit currency they choose. So what he's essentially saying is that there's a flexibility of payment according to whichever Bitcoin fork they wish to operate from or choose to work with. He argued that economists prefer Bitcoin Cash as well. But again, this is coming from Roger Ver. He also explained that in the November fork with SegWit2x, as per the New York agreement, it will increase the megabyte block size. It's pro-miner, so obviously miners support it. His philosophy is he wants to unbank the banks. However, as we know, Roger's compromise was the adoption of SegWit in this New York agreement, which he was not a proponent of, but certainly was a proponent of increasing the block size. So then the debate rages on about SegWit itself, which is very important if we want to decide which of these Bitcoins we want to support. So in this argument, I tried to sort of think about, okay, what is going on with SegWit itself? And one of the things that were raised in this YouTube here was that, an irony that of the function of SegWit, in that obviously from the outset with Bitcoin, we wanted to provide, or the designers wanted to provide a platform in which impoverished nations particularly could access currencies to hopefully uplift their social and political plight, and also to have more upward social mobility and economic mobility. But the irony here is that SegWit, by its fundamental design, is actually going to further preclude these people, because it relates to high transaction fees potentially and slower confirmation rates. But even more importantly is that it not only, and we're talking about SegWit Bitcoin Core, but if we move across to SegWit2x, we go one step further, in the sense that it's even more ironic because it moves into a very centralized model that's controlled potentially by a consortium-like structure that's very much linked to private enterprise and companies like MasterCard. So that's moving into some serious dangerous territory that could potentially debase the entire cryptocurrency market and devalue it. Okay, so then I wanted to talk about Craig Wright. Yes, he's controversial, but no less he is a very educated blockchain speaker. So I communicated with him recently to understand a bit more about his view, and I asked him directly about some of these things like the Gigablock testnet initiative, and he was explaining that soon there'll be some feedback on that study. But also he's made the very clear point that BCH is most like, again, it's reinforcing what Roger's been saying and some others as well, it's most like the original architecture of Bitcoin. So again, we have to keep asking ourselves, what is it that we want to fight for? What architecture do we represent, and what facility do we want to sort of represent as a currency? Moving across to Andreas Antonopoulos, he is an absolute legend when it comes to Bitcoin information. So I've had a lot of notes for him. I probably won't have time to go through everything, but he really pushed the envelope when it came to understanding Bitcoin. Essentially, he's not suggesting by any means that Bitcoin Core is going away. He's an overt proponent of Bitcoin Core. But he does raise some really interesting points. So if you want to go through them, I'll again send this to anybody. But he did say things like, we just don't know what the future of Bitcoin is, given that it's such a contentious issue right now, given that there's so much politics happening. But regardless of what happens with Bitcoin, he makes it very clear that blockchain's here to stay, and cryptocurrencies will continue to develop. He makes some really valid points about the value of scarcity as a metric of value. He explains scarcity in detail, so again, if you want to check out his notes. He goes into a lot of detail about what exactly a signature witness is, and basically explains it another way as a cryptographic proof. And basically how it's worked is that if you really want to understand the key difference, here you have Bitcoin Core. Here you have the original Bitcoin structure before all the forking. So we'll call that Bitcoin Core before anything changed. And then you have Bitcoin Cash as one example. What happened was that the Bitcoin Core team at some point wanted to change the location of the signatures on the blockchain. So Bitcoin Cash camp, before they forked, they didn't like that. They wanted to keep everything nice and smooth and just cope with some of the issues of scalability as it presented itself, and really redress that first, not look at things like Lightning and other initiatives. But this camp said no, basically we want to innovate, we want to try and see what that will do for the blockchain and whether that will, essentially improve usership and adoption. And that's what happened. So they decided, just through that disagreement, they split. And then from that, then there was the later New York agreement to try and then redress it so there weren't these continual forkings, which didn't happen, and Bitcoin Core did not sign. So fundamentally, it was about SegWit trying to remove signature malleability. It was trying to measure, basically through SegWit, they were trying to rebroadcast exactly where the signature sat on the blockchain. And in doing so, it was designed to free up a lot of the computational data and the computational space, because basically what happens in a blockchain is that once the signature enters into the blockchain, it becomes redundant and obsolete, but it does take up a lot of computational power and data. And so the idea was that by relocating that particular signature, it was going to free up a lot of the computational facilities and space of the blockchain. And that's why they did it. And there was this huge aversion to that with Bitcoin Cash, and then what ensued was a fork. Then, I guess from there, we had Roger Ver's arguments. I don't need to go into that. Everybody knows how he feels about it. His arguments that doesn't have Bitcoin Core doesn't have the utility that Bitcoin Cash does, etc., etc. If you want to know more about that, just check out these notes. He raises the issue about double spending and its problems there. And that's also been confirmed by other key experts like the third generational researchers like Vincent Cremoli. He went into detail about that. Michael from Box Mining, he had some really important statements. He's quite concerned about SegWit2x and how it's going to impact on the ecosystem, the Bitcoin ecosystem. And his fundamental point, and I think this is important, is he really hit home a home run when he said, at the end of the day, regardless of what happens in the inner circles of blockchain, what really matters is what we as users decide. What do we decide as the fundamental decentralized currency that's going to be one that it connects us, the one that allows us to circumvent third-party intermediaries in a really dynamic, in a really functional and a really easy way. And he didn't have an answer for it, but he was really making it clear that if, as users, all of the collectively, if all the people around the world have decided generally on the blockchain that better suits their needs, then that is actually the real power. That's where the revolution comes from. It means that you don't have to necessarily follow the requisites of any particular core group, like we've seen with the New York agreements. Often this is happening behind closed doors, but we can do this in the open. We can decide which is the one that best facilitates our needs, which is the most decentralized, which is the one that best disintermediates without the need for any permissions. So I think it was brilliant what Michael did in the way he addressed that, and that's certainly the way I've sort of tried to gear this talk. So then I made some other notes, guys, and I won't go into my views, but there's some notes if you want to check out some of the things I found about them. And then Bitcoin Magazine, again, it raised some really key issues about SegWit2x. And again, I might read these really quickly with you, for you. One of the key points about SegWit2x was that it presented a middle-of-the-road compromise between two warring camps on the scaling debate. On one side, you would get SegWit, being Bitcoin Core. The other side, you would get a capacity increase hard fork. Most signatories believed, at least at the time of the agreement, that this would be a solution that should keep Bitcoin network together. And then there was furthered by the idea that SegWit2x appears to be at least partially motivated by the desire to remove the perceived power or influence that Bitcoin Core contributors have over Bitcoin's protocol development by having a majority of companies and miners switch to the BTC1 software client. And I put in brackets there Jeff Garzik as well. Now I just want to talk about that because personally I think that's a lot of crap. What really should be said is that SegWit2x is fundamentally a private initiative that was done by a small group of people to try and move the Bitcoin protocols away from their public and permissionless state to one in which there were indirect correlations with enterprise and permissions and privatization. And that in itself is a huge risk for the integrity of the overall network, because that is nothing to do with why Bitcoin exists today. It's essentially designed to be one in which enfranchises open source, decentralized mechanisms for currency transaction. The other thing to point out is that there are some serious connections that we found between Jeff Garzik, between his company that he represents, and companies like MasterCard, and also banking links as well. So again, that's just reinforcing that conversion to a centralized model, or at the very least an interconnection between centralized parties. So moving on, and if you want to know a bit more, that company I was talking about is called the Digital Currency Group, and you can certainly Google that as well. But SegWit2x was forged between a relatively small group of executives from prominent Bitcoin companies during an invite-only meeting in a hotel in New York. So again, this is not the interests of everybody. This is not about you and me. This is not about what we want to use as a currency. This is a conversation held by essentially executives that are supposed to have our back and have a voice for users of cryptocurrencies. And instead, what they've actually done is tried to very surreptitiously manipulate the entire integrity of Bitcoin by manipulating in such a way that the very premise and purpose for Bitcoin has been changed. SegWit2 is really just about trying to support enterprise, to support the layer 2 adoption. So again, it's a huge risk. Then we have Ivan Tech. Ivan Tech, he is quite interesting and very well informed with all of his experience. And he raised some really good points in there as well, which I'll just put up here. His arguments were that there was a huge naming problem, and Coinbase is currently looking at trying to maintain the Bitcoin name for the Bitcoin core. So BTC, obviously the idea is for it to remain as such, but then we had Michael from Box Mining say that that's still a debate happening at the moment, whether or not that will happen. So imagine if BTC is suddenly aligned with SegWit2x. That is a massive problem for all investors, for current investors and for subsequent investors, because if you arrive into the market and you don't know anything about SegWit2x and you just look at BTC, you're going to be thinking that you're investing into the original architecture with a few slight changes with SegWit. So that's important to know, because they won't know the connections with private enterprise. Finally, I just wanted to, I guess, finish off with a few. I'll finish off with the Arcane Bear, and then you guys can just research the other notes. But Arcane Bear produced some really good quality information with regard to investigating SegWit2x and Bitcoin Core, and his position was equally strong in that he really proved through his research that there are overt links between enterprise, banks, and SegWit2x, and it's really important we recognize that. If you want to go on and look into it further, by all means do it. I've tried to provide all the posts. He was waving some serious red flags when he was talking about SegWit2x, and I was paying attention. So guys, here's some other notes if you want to look at it. I've talked about Da Hongfei's statement about the difference between NEO being a non-cryptocurrency and that's another conversation, but that's important for understanding Bitcoin. Then we have Tom Vey. He had some really interesting points to make. Jimmy Song as well. But finally, I just wanted to finish off with some findings. I do want to thank Bo once more, mate. Thank you so much for your initial video. It really prompted me to look into this. So my findings are that I think that Bitcoin Cash and Bitcoin Core will battle it out for supremacy. At this stage, however, I don't think that's going to happen. I think usership dominance rests with Bitcoin Cash only in that there's a transitional period happening right now where things like mining favorability and transactional ease and cost are actually potentially favoring Bitcoin Cash. That doesn't mean that I think that the Bitcoin Core is going to go away. I don't think that at all. While I strongly believe in the future of both, I do see Bitcoin Cash value rising considerably in the next year. Both are decentralized by design and hence are worthy of our respect compared with SegWit2x. To me, it's basically a piece of shit. It it underpins a degree of centrality or centralization in what is designed to be a fundamentally decentralized peer-to-peer network. It's got clear ties with MasterCard, clear ties with bankers, clear ties with the private sector, and it's run by essentially a few private companies, and I really don't like anything about that. And also I don't like the whole premise of SegWit2x anyway and what it stands for. I think it fundamentally is threatening the very core that is Bitcoin, and you know, if that was the primary Bitcoin that was utilized by the majority, then obviously I would be personally concerned for the future of all cryptocurrencies. So finally, if this intermediating functionality is not protected, that being Bitcoin and its premise, then all cryptocurrencies are at risk. Blockchain, however, will endure. It will endure because it has a propensity for quasi-centralization in a permissionless and trustless facade. So what I'm saying by that is that knowing so much about blockchain already, and the research I've done, it's obvious to me as it's progressed from generation 1, 2, and 3, and it will move into 4 through even better interoperable blockchains. There's a lot of interlinks between private and consortium blockchains and public blockchains, and that's only getting stronger. So I don't think that's going to go away. I think that's going to become a relevant aspect of blockchain. But again, separating that asset component of blockchain and cryptocurrency and currency itself as a function, this is where it's important for blockchain, because right from the outset it was always a very successful currency. And it could well be that B2X, being the new SegWit2x Bitcoin, it could well be that it become the next cryptocurrency for business, consortiums, and enterprise. You know, given that it could very much juxtapose with the initiatives that are happening through the asset developments in the ecosystems that are emerging now. But this will be a really sad day for blockchain if this does happen, simply because it further cements the power of centralized corporations, enterprises, businesses, consortiums, and obviously banks are in that equation. It represents them and their integration into the blockchain. So again, it's a sad day when we see SegWit2x being a prominent figure, and for that reason, guys, my conclusion is that Bitcoin Cash and Bitcoin Core, they are serious players. They are the things that we stand for when we talk about decentralized models, and it's something that I certainly will be jumping off the fence for and vouching for. You know, in terms of my own position, I finally jumped off the fence, and I'm an advocate for both Bitcoin Cash and for Bitcoin Core. I think they both have a place in the decentralized space. They represent our ideals of what we wanted to avoid, that third party. That's fundamental to our future as cryptocurrency investors. And without it being financial advice, I hope that all this has been informative for you. And again, I look forward to interacting with you guys in the future. Until then, it's blockchainBrad signing off. Talk to you soon.